It's the day after the 2024 presidential election, and after a convincing win by former President Donald Trump, we can see the stock market is hitting all-time highs. And if we look at a heat map of the S&P 500, we can see green pretty much everywhere, but specifically in the semiconductor sector as well as the financial services. And as a result of this run-up, my portfolio just hit new all-time highs by a pretty large amount as well. We can see my portfolio value is now almost $212,000, and I've seen over $60,000 in gains. These are both records for my personal portfolio. And if we jump over to my Seeking Alpha watch list, we can see there's quite a few stocks that are up by a massive amount today. CVS up by almost 11%. Jefferies Financial, a stock I added to my portfolio around a year and a half ago, is up 9.33%. And in fact, if we jump back over to my portfolio and blow up my growth chart, you can see this is a stock I've seen massive success from. I'm up over 135%. Go back over to our watch list. JP Morgan up 8.44%. That's a new all-time high for them. Regions Financial, another bank, 7.28%. We can see Bank of America 6.35 and Caterpillar 6.61. And then one of my new additions to my portfolio this year, UNH, is up almost 6%. And the list goes on and on. For example, Visa, one of the largest positions in my portfolio, another new all-time high for them, trading above $300 per share now. So if we go back over to my portfolio, we can see Visa right here. I'm now up over 39% on this position. So far, the market actually seems to really like what it's seeing. But I want to give you a quick piece of advice / warning. Every time we have a new election, we start to see headlines like this. Here were the top Trump trades recommended by Wall Street heading into the election. And you'll start to see articles like 5 stocks to watch if Donald Trump wins. And I would urge you to be cautious of these headlines, and let me show you why. Trying to pick stocks based on who the current president is sounds like it makes a lot of sense at first glance. But historically speaking, it hasn't typically worked very well. Here's a great example of this. You would think when Obama was president, we'd see great gains from green energy stocks and probably decreases in oil stock returns. But the exact opposite happened. Green energy stocks were down 77% under Obama and oil stocks were up 41%. What about the opposite? What if we look at Donald Trump's first term? Green energy stocks were up over 300%, while oil stocks were down 40%. The same thing is true with Biden. Green energy stocks down around 38% and oil stocks up over 182%. So when you see these types of articles, again, I would urge you to be cautious. Now, there's no doubt that presidential policies can play a major impact, especially on certain industries. For example, if Trump does choose to impose some tariffs, that will undoubtedly play a role in some companies' fundamentals. But the reality that we've seen from the US stock market over a long period of time is that despite who is in office or whether or not we have a Republican or Democratic-led Congress or Senate, the stock market has continued to do extraordinarily well. If we look at the growth of $1 in the S&P 500 through political cycles, we can see since 1901, $1 would have grown to over $96,382. And the data backs up that statement. In fact, we can see the best returns over time have actually come when there is a split Congress. So as for me, yes, it's always really fun to see my portfolio hitting new all-time highs. It's fun to see the massive jump in a lot of share prices in stocks that I own. And it's also very fun to see confidence in the American economy and in the American markets. But like always, we should be focused on controlling what we can control, searching for high-quality companies that we can buy at good valuations that will help us achieve our long-term goal. And in my case, helping me achieve my long-term goal of one day being able to live off dividend income. My personal dividend portfolio is now paying me $6,218 in expected yearly dividend income, and that's on average close to $520 every single month coming into my portfolio. So we should absolutely be enjoying these gains, but keep in mind, the money isn't actually made on days like today. It's made when stocks are actually down, and you've done your research, you've done your analysis, and you've performed your valuations, and you know what your long-term goal is and how to achieve those goals. And that empowers you to buy stocks at the right price. And that's how you can really start to enjoy days like today. So whether or not your preferred candidate won, I'd urge you to stick to your plan, because history shows us that the American economy and the American market is strong. Take it from Warren Buffett at his 2020 Berkshire Hathaway meeting. Never bet against America. If you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.